Hello, I'm Catrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. With over 2 decades navigating the twists and turns of accounting, tax, and business strategy, I've had the incredible opportunity to work with startups and Fortune 500 companies alike, crafting pathways for businesses to grow and thrive. I've tailored my expertise to serve the unique needs of industries ranging from real estate to creators to marketing and beyond. I'm on a mission to equip individuals with the financial savvy they need to succeed. Through my Wealth Intelligence course, I'm all about breaking down complex concepts into actionable strategies for business owners. Welcome to Craft More Cash. Let's make wealth building simple, fun, and effective. Ready to transform your financial journey? Hello, this is CatrinaMCraft-Tax-Strategist and Business Advisor and CFO. Today, I want to talk about internet deductions. When we think about home office, we're often talking about the expenses related to an office, but internet is one expense that could be categorized as a home office expense, or it could be a separate expense for your business. Depending on what type of entity structure you have, there's different rules and places on where and how you deduct the internet deductions. So today we're going to talk a little bit about internet deductions, how the IRS views those internet deductions, and the best way to track and to make sure that you are accurately deducting all of your business internet usage. The first item we want to talk about is sole proprietorship. When you're a sole proprietorship, you report your expenses and income on a Schedule C, and that's a part of your 1040 tax return. On the Schedule C, there's a way that you can either deduct your internet on the business part where you're applying deductions, or you can put it as a part of your home office expense. What you do need to be aware of that the IRS may question if you are putting down 100% business use, because we know that if you are working from home and using internet in your home, then there may be others in your family that are using that internet as well, or you may be using that internet for things other than business. Please look at Google the apps. There are apps that actually track your internet usage. So if you want to be just really risk adverse and you want to track your internet usage, please look for those apps that allow you to track your internet usage. When you have a S Corp, you will be able to deduct the internet in your business if you have a separate facility. Also, if you have a home office in your S Corp, what you're going to do is you're going to track your percentage that you're using in your home office, and you're going to submit that as a reimbursable expense to your employer. And your employer is yourself. It's your business. You are the employee in an S Corp and your business is the employer. You would be able to get a reimbursement for the business use of those internet expenses. In a C Corp, it works similar ways where you can pay yourself a flat rent. And that rent to rent your home office is going to be something that's reasonable. The best way to look for a reasonable rent is to look around for office space and to determine how much would it cost to rent a similar size office space in your area, and if you had a business commercial space. Once the company pays you rent for renting your personal property, that's your personal house, you are going to report that rent as income. But the good thing about the internet is you would be able to deduct expenses against that income. So the expenses of your house, whatever percentage of business use that is, internet, you'll also be able to report real estate taxes against that. Your mortgage, your cleaning, your utilities, different expenses that go along with the rental of the property, you would be able to charge that and deduct that from the income that you're receiving from rent from your C Corp. So that's why it is important to understand there are different ways to deduct internet expenses based on your entity structure, whether you are a sole proprietorship, a partnership. You have two ways on the partnership. You can either do a reimbursement where your company reimburses you, the partner, and you have a partnership with someone, but the company reimburses you for those internet expenses, or you can deduct it on your personal tax return. Know that it is important that everything is not the same for everyone. So when you hear people on the internet or your friends doing it a certain way, that does not necessarily mean it's the best way for you or it's the proper way for you and it's the legal way for you. Make sure you understand the tax code. You're working with a tax professional that understands the differences in entity, the differences when you have certain types of businesses. There are different rules and regulations and laws. But do remember, deduct your internet expenses. You're using the internet for business. You can track it on an app. Google different apps to track your internet expenses. Make sure that you're documenting that you're using it for business, and there are different ways that you can deduct it depending on your entity structure. When we talk about the home office, there's some guidelines that you must know and you must follow in order to take the home office deduction. It must be regular use. It must be exclusive use. And that could include you having a commercial building where you see customers and you sell your goods. And when you go to your home office, you are doing administrative tasks. That is fine to have both a commercial space that you rent and a home office. You need to make sure that you're tracking your utilities. If you have rents, if you're paying rent and you don't own the house, the rent, home cleaning, janitorial services, taxes, real estate taxes, insurance, those items can be deducted under your home office. And how it's done is a percentage of the total space of your home, and then you look at your home office space and it's allocated. There are different ways to deduct the home office. It really depends on the type of entity that you have. In an S Corp, you pay yourself. You are actually doing an employee reimbursement. You turn in your expenses for the use of your home. Your S Corp would pay you, and they get the deduction for that home office on your business tax return. In a C Corp, it's a different way. Your corporation pays rent to you. It's not a reimbursement. It's just paying rent to you, and it's a reasonable rent rate. In a Schedule C, which is a sole proprietorship, it is done differently. It's reported on your individual tax return. There is a form that you complete for your home office. That's why it's important to understand when you set up these entities, you understand the tax law and how you have to report it in each entity, because it can be different. That is the actual method. There's also a method that the IRS started in 2013 called the Simplified Method. It allows you to take $5 per square foot of office space. That means if you have a 300 square foot space of office, multiply that times $5, and your possible deduction is $1,500. Note, 300 square feet is the limit. So if you have more space than that, you could be losing money if you do the Simplified Method. Also on the Simplified Method, you cannot have carryovers of deductions for home office. One note you must realize is that to have a home office deduction, you have to have net income in your business. If you don't have net income in the year that you have the home office deductions, they roll forward to the next year or until you have net income in your business. Note that you have to have net income. And in the actual method, that's the only method that allows you to roll forward any of those deductions. In a simplified method, you cannot roll forward. You just lose those deductions. But what happens is you have less record keeping. In the simplified method, remember, it's just $5 times however many square foot of business space you have in your home. Also, when you think about home office deduction, you can look at a space where you have inventory storage or product storage. That could be your garage, or that could be a room. So it doesn't necessarily have to be a desk and an office. It could also be you're using your home to store products, to store inventory, and you also need to determine how many square feet you're using to do the storage. The home office should not be something that you're afraid of. Know that the IRS wants to incentivize business owners, and that's one way, because they know that we need office space in order to conduct our business. And taking the home office, you should not be afraid of. The IRS allows it. If you know the code, you follow the guidelines, you take a picture of your home office space. I advise all my clients to take a picture of the space, because if you're ever audited and you've moved from your location, you have proof that you were set up as an office. You show your products, or you show that you had a desk, you show that you were operating as a business, and you also show if you are doing regular administrative duties there. You have a log of that, just how often you're doing it. If it's 2 hours a night and you just document that, extrapolate that number, that is a great way to document that you are working in your home office. Another tip that I love to talk about is the Augusta Rule. And there's a lot of information out there about the Augusta Rule that is happening on social media, but sometimes they're not giving you the full story. So I want to set it straight, provide you the guidelines so that you are not in trouble, you're not getting audited, and you're not taking a deduction that you're not allowed. First, the Augusta Rule is a rule that allows you to rent your home. Your business can rent your home, pay you as the owner of the home a rent, and it has to be a reasonable rent. The company, your company, gets the deduction. You as the owner do not have to pay taxes on that income as long as you're renting it 14 days or less. So basically, your business will pay you to rent your own house. There are some strategies around doing this. One strategy, because we do have time, 14 days, we still have that available during the rest of the year. It doesn't have to be all together. It doesn't have to be 14 straight days. A lot of people are doing planning meetings now. So you could have a 2-day planning meeting. You could have a retreat. You could have a Christmas party. And as long as you are entertaining clients, or you are having meetings with clients, customers, and your employees, you're doing some type of business activity there, you are allowed to rent the home to yourself. Make sure you keep records. I also would say if you have food that you're catering in, that could be a deduction for you depending on what type of event it is. If it's a company party, it's 100% deduction. And we're going to talk about what type of meals are 100%. But if it's a meeting where it's a business meeting where you're having customers and it's not a party, a company party, that's a 50% meal. There are different guidelines that you must know on understanding meals, understanding this Augusta Rule, and we've also talked about home office. While it's important to know there are different ways to deduct the home office depending on what type of entity structure you have. But back to the Augusta Rule. That's a great way to pay yourself. Your company gets the tax deduction. What you need to do is make sure that you're charging a reasonable rate for the house. And what I suggest is you go and you look at PeerSpace. That's a great way. You could look at Airbnb, but PeerSpace will probably be a better fit for what you're trying to do, because that would be like a corporate rental, or rentals that they have for photo shoots or meetings. That would be a great way to look to see in your area how much would they charge for the same comparable home, furnished with the utilities included, with the space. If you have a backyard where you're having something in, you can consider your backyard oasis as a deduction. And what you would do there is, if you're decorating it with any type of decorations for the event, that could be a deduction for you as well. So the Augusta Rule gives you a lot of opportunities, especially as we approach year end, where a lot of people historically have planning meetings, and they may have vision board parties, and they have Christmas and Thanksgiving parties. It's a great opportunity for you to use that Augusta Rule. But there are certain rules It just depends on your circumstances, on how you're using your home office and the Augusta Rule together. The same applies to a C Corp and a partnership and an S Corp. It really just depends on if you already have a home office, if you're going to be able to utilize the Augusta Rule with the home office that you're deducting. So you need to look at what is the best situation for me. One of the benefits of the home office is that now your office is where you start your day. And that means any mileage that you have when you leave your office, which is your home, and you go to another location for business, whether it be a commercial space or if you're meeting with clients, if you're going to the post office, running errands related to business, all of that now would be able to start at the home office, the mileage, and continue until you return home. You would track all of that for your business mileage if you're doing business errands. So it may be better if you do a lot of traveling and you're leaving your home office every day and you're going to business locations, or you're in sales and you're traveling and you do a lot of networking. It may be better for you to have a home office and then get your deduction for your miles as well, rather than to do the Augusta Rule. That's why when I started the conversation, I talked about tax planning. You need to look at the plan on what's going to be best for you and consider the options. If you wait until tax time, there's nothing you can do because you've already made that decision. So now is the best time to plan your home office, if you're going to use the Augusta Rule, and also if you need to take mileage on your business vehicle. And there is a way that you can have a new vehicle and get a huge write-off. I have an example on a strategy where someone bought a $90,000 SUV crossover vehicle and they were able to deduct $78,000 of that in the first year. Where do I go from here? You can learn to grow your wealth and develop financial intelligence by joining. It's a 6-week wealth intelligence program. So it's 6 modules, and every week you have homework, you have things that you need to go over, and you have a Q&A with me every week. And you're going to develop your net worth. You're going to have budgeting. You're going to look at QuickBooks. We're going to look at your KPIs, like what do you need to track. We're going to make sure that we have a plan that you wanted. And then by the end of that 6 weeks, you're probably going to adjust that plan because you're going to feel so strong and feel like now you have the wealth intelligence to make different choices. Know your strategy, know the tax code, and it can benefit you as a business owner. The tax code incentivizes business owners and people who invest in the economy. Stay tuned for more great tax tips that could help your business keep more money, build wealth using the tax code.